Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, now that the VIX is at its lowest level since 2007, you can't open up a newspaper without seeing that VIX is cheap. Why is VIX going lower? It's time to buy VIX. What's going on? Well, here's the real story. Let's keep in mind a couple of things. First, VIX is measuring 30-day expected volatility for the S&P 500. What the market might be saying is that they're not expecting anything to happen in the next 30 days. And in fact, when it comes to the debates in Washington, etc., we're talking about February and March, not January, not the next 30 days. So the VIX is grinding lower, and it's because 6-day realized vol is about 6%. We're seeing 40 basis point moves per day. Quite justifiable, and with that we're seeing VIX lower again, right now 13.62. A little bit of correlation breakdown in the equities. We're seeing the Dow down about the same amount. However, NASDAQ volatility is actually up marginally. So there is a little bit breakdown in correlation, probably due to the earnings season, which is kicking off in full force starting a couple days ago. Euro. Well, when it comes to European currencies, we're seeing the dollar getting absolutely crushed with this against the Swiss and the euro currency, also the risk currencies across the board. We saw some good numbers come out of China, a great Spanish auction. With that, volatilities are lower across the board in currencies, except for the Japanese yen, which once again cannot find a bid. Japanese yen vol up about a half a point, 3-month at the money implied volatility. Moving on to gold and silver, quite a divergence of stories. We're seeing a risk-on mentality in both gold and silver. Gold up about $22, silver up about 65 cents. However, with that in mind, volatility in gold is down. 1-month vol down about 3/4 of a point. On the other hand, silver sharply unchanged with 1-month at-the-money volatility. So a divergence in volatility in the metals market. Moving on to oil. Oil also in a risk-on mode, up about 87 cents on the day. But with that oil volatility struggling to stay at the flat line, we've seen it down about a half a point, up about a half a point right now, sharply unchanged on the day, just kind of recovering after some of the moves oil vol has seen over the last 3 or 4 days. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.